What is your price target? What are your expectations for gold this year? And what are the factors leading you to this conclusion?
Right. So, I mean, we're pretty constructive even at these levels. I mean, it's done a lot of mileage. It's $130 up in the last few months. There's just a lot of things coming towards gold. You've got this inflation underpinning, which has been an issue for the past 8 months. We have recession fears. And then within the past 2 months, we've seen a bit of a game changer with the fact that you've got a banking crisis that the Fed has had to backstop and start expanding the balance sheet. All of that is playing into gold prices. We do see pricing hitting all-time highs in the short term. But ultimately, gold is a scorecard on how well the Fed lands this. And if the Fed cannot do a good enough job, we do see gold getting up to 2,500.
2,500. OK, that's a big jump from where we're at right now at 2014 right now. So right now we're also showing the likelihood of a Fed rate hike. So give us a sense. We have the potential recession on one side. We have the Fed potentially hiking rates on the other side. How does that impact the gold market?
So there, this idea that the Fed is handcuffed, it's got inflation, it's got financial instability risks, and then it's got a recession. And we don't think that it's going to be able to solve all three. And that's why gold comes into play, because of the increased uncertainty around all these three factors. That is a core driver behind pricing.
Are there any potential shocks coming up for the gold market? We're going to talk about the impact of Silicon Valley Bank and Signature Bank in just a moment.
Right.
But is there anything else coming up that could potentially change your outlook on the gold market?
Right. So, there's certainly sort of bearish risks we have to take into account, and the fact that the Fed could potentially over-tighten. And if they do, we do see a bit of a deflationary backdrop across all assets, including gold.
All right, so the Fed is obviously a big factor when it comes to the gold market and precious metals in general. I want to talk about Silicon Valley Bank and Signature Bank, their collapses. You said that was a game changer for the gold and for the silver market. What made it a game changer? And then as we have big bank earnings coming up later this week, could that also impact the precious metals market?
Right, absolutely. So, you had the fact that in Q4 last year, the Fed broke a very contained market. It was the crypto tech market, and that sort of bled into the broader financial sector. And so we've seen a reallocation of wealth as there's simply been a crisis of confidence when there is a banking crisis. And that has gone into crypto, it's gone into gold, it's gone into money markets. And so with bank earnings coming up, I think investors are just very uncertain, and we'll look to see what it brings. But certainly if equities start to trade on the back foot, we could see a push further into gold.
All right, I want to circle back to that 2,500 price target. Again, just really quick for everybody listening, what would be the potential setup for us to reach 2,500 an ounce in the gold market?
You've got to look back to 2008, and gold there doubled, went from 800 to 1,900 in the space of 18 months. And so if we see the fact that hard or harder landing risks rise, and the Fed really having to forego inflation and start ramping up this balance sheet, we could see gold take off again.